XAnalysts. Empowering analysts, transforming markets.
Everyone, another episode of Exploring the Energy Markets podcast. Another fabulous guest from a very different field this time around, metals in mining. Amanda van Dyke is a veteran mining, natural resources investment executive with over 2 decades of experience in commodity markets, investment banking, and fund management. Amanda is a founder of Critical Minerals Hub, part of Critical Minerals International Alliance, to spread the awareness, to spread the right education about critical minerals, supply chains, about energy transition, and most above all, thinking about these markets in a very objective and a data-driven manner. Earlier in your career, Amanda managed a lot of gold, precious metals funds at many companies like Ocean Securities, Pareto Securities, GMP Securities, as you will find out through the podcast, and also served as executive leadership of women in mining in the UK, and publishing the first comprehensive business case for women leadership in mining worldwide. I'm in Sydney, and Amanda is in New York. Welcome, Amanda, to the podcast.
Thank you very much. I'm glad to join you.
Well, Amanda, we have lots to talk, and I was really excited when we had our previous call about how the metals and the mining kind of an industry has evolved. And with all the energy transition happening, there are so many different facets of the market that are emerging. I remember we talked about how sulfuric acid is becoming a very key part of the market. So we'll drill a lot of deeper. And the purpose of this podcast is to bring not just the hard numbers, the market side, but really to inspire a lot of the young analysts in the market and the future generation, so that there is high quality of analysis, high quality of energy debate, and high quality of energy decisions. That's the mission with XAnalysts, and that's the mission I'm really excited. So to kick off, Amanda, tell me about a little bit about your journey, about yourself, and how you got to where you are. I'm sure long years. Really, that would be nice to hear.
I'm very lucky. I work in critical minerals, and I got into critical minerals mostly by accident. And critical minerals are extremely hot right now. 5 years ago, nobody knew what a critical mineral was. Now everybody knows or thinks they know what a critical mineral is. But nonetheless, I started off as a gemologist, a crystal geologist, and I went and I was quite bored because looking at rocks all day is actually really boring. And so I went and I got an MBA, and I was working in Toronto, and I got a job starting just as an intern for an investment bank. And because I had a geology background, they're like, well, you should work on our mining desk. I didn't know anything about mining, nothing.
Wow.
And you look, when you start as an analyst, you work for, like, you're basically a researcher for someone more senior, and they teach you what to do. And I found that I loved researching commodities. I thought uranium, which was the first, our company was working on one of the biggest uranium deals in the world. It was for a very large listed company, or a company that was doing an IPO in Kazakhstan, which was going to become the largest uranium supplier to the world. And suddenly they needed experts on a commodity nobody knew anything about. And so they threw a bunch of young people at it. So they had senior analysts and they threw a bunch of young people. And I got to dive super deep into this incredible market where there was reactors all over the world. There was mines with a certain level of production, and there was all this in-between fabrication. And I was just fascinated at how something went from coming out of the ground to turning on the lights.
Wow.
Within that, there was, this rock full of a yellowy radioactive substance, which I've actually picked up and is not that radioactive, contrary to popular opinion. And I got to see something about working energy and commodities are basic materials that every single one of us uses every day of our lives. And being able to figure out where they come from and how they get through a crazy circuitous route to where they're going to go is a really fascinating thing. But anyhow, I did it by accident. I was in geology and they said, well, you need to analyze uranium markets, right?
Well, that's a fascinating story, Amanda, that, I could say the same thing about oil, but today it's about the rock, not the oil. And maybe, I would want you to, at the first, we talk about, rocks, minerals, critical minerals, rare earths. Can you just lay it all very clear in definitional terms so that, everybody just follows your story well?
This is the thing. There's a global mined mineral market,
Mm-hmm.
which means hard rock, so not gas or oil. Hard rock mining is anything you dig up, basically. Um, Contrary to popular belief, more than 50% of all the mineral tons we mine are still coal all over the world. And then we mine a lot of 5 other major commodities. The next biggest is iron ore, which makes steel, which builds everything.
Yeah.
And also top 7 commodities, hard rock commodities mined in the world, make up over 80% of the market. The bottom part of the market is made up of another 50 or 60 odd materials, many of which you've never heard of. From things that, well, a lot of people have heard of, like antimony. I don't know, maybe you have or you haven't heard of it. Or
Mm-hmm.
these days, people are more familiar with words like gallium and germanium.
Mm-hmm.
They're all required. One of the interesting things about critical minerals is there's so many of them and they have so many different functions. And they tend to have really opaque versions of supply. So what makes a mineral critical is
Mm-hmm.
not what it goes into, is the supply chain of it. So a critical mineral is
Wow.
a mineral for which the supply chain it's essential in some way. Like we definitely need it for something. Like for example, germanium, we need it for chips and deep sea cables, both of which are very important to the economy. But there's lots of things that we need lots of. We need steel, right? We
Mm-hmm.
couldn't build a bridge or put up a building without steel, but there's lots of it, and the supply chain isn't under pressure. What makes a mineral critical is that it has a supply chain that we cannot rely upon, where
Wow,
there's either very few supply.
I didn't think about it. So that's really fascinating to understand. It's the supply chain. And sorry to interrupt, but
That's
what
okay.
about the rare earths then?
So rare earths, believe it or not, are not rare. Their supply chain is the issue. Rare earths are inappropriately named. Theoretically, we have enough reserves of rare earths globally that we know about, and reserves are just basically economic quantities of a mineral that we know where it is, and we've proven that it's economic to extract, right?
Mm-hmm.
We have about 200 years worth of known rare earth reserves in the world. So strictly speaking, rare earths aren't rare. What's rare is a supply chain that can get the rare earths out of the ground and into a permanent magnet. That's much harder. That supply chain is what's under pressure. And so the problem is that processing in this particular part of it is the issue. Processing is complicated, it's expensive, it's energy intensive, and it uses a lot of chemicals. And the only people that are very good at doing it right now, because it's a bit of a dirty business, are the Chinese. So while the Chinese mine a lot of rare earths, which is why they developed all the processing capacity. But now we know where the minerals are, but nobody knows how to process them but the Chinese. And that's the issue.
Well, you
So as I said, it's not the rarity of the rare earths, it's the ability to break down the molecule. So rare earths are 17 different individual elements that tend to be bound up in the same deposits in different quantities. And actually separating them from each other to break those complex molecules down, as I mentioned, chemical and energy intensive. It takes a lot of time and a lot of very specific titration. It's very, very difficult. And that is the issue. You can have as much as you want of a rock. If you can't get it into a usable form that you can then put into something like a permanent magnet, then you've got a problem. Or if all of part of the supply chain is in one country, whether that's
the
the
problem.
mining, the processing, the parts manufacturing, then that's where the problem is. So as I said, the criticality has nothing to do with how essential it is and everything to do with how constrained or vulnerable the supply chain for it is.
Well, I think you just made it so crystal, and I want to repeat it. One, critical minerals is the supply chain that's make it critical, not the use of it. Second, you just told that rare earth is not rare. It's just that it is controlled by probably one country like China. And also, I think a very interesting point you mentioned about that a lot of these minerals and metals are together in a rock, and separating them is kind of the big thing. So in this market, I mean, I want to ask you, what's the hot debate? We do hear a lot of debate around US wanting to get hold of these minerals and metals. We hear forays into Ukraine, into the African countries. What really is the hot debate in this sort of commodity side of the metals and minerals today and probably in the years to come? What would you say?
So the debate and what's hot isn't actually what matters. As someone who's been in this market for a very long time, the issue is actually not that they're valuable, it's that they're not valuable enough. And the problem is, could we build? So as I mentioned, let's just use rare earths as the example here. We know of lots of deposits of rare earths around the world. The Chinese have all the technology, but we could build our own processing plants. Why haven't we built our own processing plants, right? We know where
Mhm.
the minerals are, and we can build it. We have money. The reason we haven't done it is because it's expensive and the money's not that great. And so people always assume that rarity or a vulnerable supply chain means something must be very valuable. But the problem
Mm.
is it's not. And the reason that we haven't built capacity or look, some things are genuinely rare. Gallium and germanium that go into chips, um, and solar panels and things like that, those are genuinely rare and hard to get. But it's often that the processing of them uh, is just very expensive and very difficult. And so the economics aren't there. And so the market hasn't been incentivized historically to build these plants. And for the last 25 years, the only people willing to invest were the Chinese. And
Well,
all the commercial, they've spent over $1 trillion developing a minerals complex, not just in critical minerals, but in everything, in the mining and the offtakes and the processing. And they've become the best miners and processors of all minerals in the world because they invested. But they were also willing to accept extremely small margins and occasionally accept losses in volatile, opaque little markets. And that's why they have this stranglehold on the global critical mineral space because they were willing to do something the West wasn't. You'll see that America recently signed a deal with MP Materials to supply rare earths. And one of the things they had to do in order to get that deal, to incentivize MP Materials to build more processing capacity in California,
mhm.
was that they needed to give them something called a cap and a collar. It meant that they had to guarantee them a minimum price because they weren't sure that they could make the rare earths, they could separate out and process those rare earths at the price the market was at. because it's the entire market for actual rare earths is $15 billion. The market for mined rare earths, like just the minerals the mixed 17 minerals that you mine out of the ground, is about 5 billion. And then once you've separated them out in a long, hard, complicated, expensive process, they're worth about 15. In the global commodity market, 15 billion is not very much money.
Yeah,
And that's the entire
that's a
global market.
smaller number. But it's it's the importance of this. So what makes it so critical, or let's say valuable? Is it because of their use and applications in strategic defense or other places, that despite being a smaller, commodity, like crude is a $2 trillion market, right? And iron ore is probably a 500 billion market. And here we are talking about 15. Is it the strategic, the defense? What makes then this so important?
Well, it's both of those things. So I'll give you a small example. So the permanent magnets are in all electric motors. So recently, when China closed down I don't know this exact number,
Mm-hmm.
but I'm going to guess. But
Okay.
I'm going to say that in terms of actual metal in a car, in an electric motor, in an electric vehicle, we're probably not talking much more than $100 in the whole car.
Mm.
That's not a lot of money. It could be a little bit more, a little bit less, but it's not a lot. But if you don't have a permanent magnet, in your electric vehicle, it doesn't work. If you don't have permanent magnets in your missiles, they don't work. If you don't have anything that's electronic, has a permanent magnet in it. Anything, every single electronic on the planet has permanent magnets in it, and they all have tiny little bits of rare earth elements, sometimes less than $1's worth.
Less than $1's worth. That's a statement. Wow. But it's so important that you can't
But if you can't get
replace.
it, it
Okay.
doesn't work.
And there is no
Based on-
substitution about, Amanda. Anybody has tried to have like some sort of a substitution of these permanent magnets? I believe the answer is no.
So there are alternatives. You can make magnets out of anything, right? There's a lot of metals that can make magnets. You can magnetize a lot of things, but nobody has the specific magnetic properties. Mostly, if you wanted to make magnets from different things, they would have to be a lot bigger and a lot less effective. There's nothing we've been able to find that
Mhm.
allows for the functionality and the size that rare earths do in permanent magnets. And there's different permanent magnets that do different things and different applications. We wouldn't be using rare earths if we had any other choice. So there's two things. One, the functionality of them is so exceptionally high. Like, I'll give you an example.
Mhm.
Terbium, it's a heat shield. So if you put it works very well for the magnetism in your magnet. But one of the things it's exceptionally good at is if you're driving really fast, your car gets really hot, and you need your magnet not to demagnetize when it's under that much heat. The only thing that can make it do that often is something called terbium, which is a tiny little rare earth.
Okay.
Um, and the other problem is, and so they found the best possible material to get the functionality they needed in different applications. And there are hundreds of different kinds of permanent magnets that are used in electric motors, but they've all been specially designed for a very specific purpose. And then from there, and so they couldn't find anything that worked quite as well. So they could find a magnet that works, but not as well. And then it gets worse because they built an entire machine around it.
Mm.
And so every electric motor in a Tesla has various, probably 10 kinds of different permanent magnets and different electronics all over the vehicle. Not that worth altogether, not worth that much, but nonetheless, a lot of little permanent magnets. And all of the speakers have permanent magnets in them. The drivetrain has permanent magnets
You
in it.
know what? The kind of, it may be a bad analogy, but that comes to mind is that you need salt in the food, A little bit of it makes the whole difference. No salt, and everything may not look good. So I think,
But
uh,
it's actually slightly more than that. Not only do you need salt in addition to that, the entire car has been designed around this magnet. So every part, there's got to be, you know, 10,000 individual little parts. If you actually break down a car and
mhm.
break down the speakers and break down the seat that has a lot of moving part, the electric motors in the seat, all of the different parts of the battery, there's got to be thousands of parts, but they were all designed to work together. You change one part, right? Like if you, let's say we say we don't want to use a terbium magnet, we want to use another magnet. Well, the only magnet that can give us enough magnetism is five
Mhm.
times bigger.
Then
Then
it,
you have to redesign your entire electric motor. And then you have to redesign your entire car to fit your bigger electric motor.
okay. Well, you are so passionate, Amanda. I'm going to change subject and track, right,
Okay.
about this whole markets. So I know you shared early on that you just happen to be in this market. I want to, delve into a lot more technicalities, market, but as I said, the goal is to inspire. Why would someone want to go and study these critical rare earth markets? What future do you see? What would you say to someone in the university? Go and study this subject, this fascinating.
Well, look, I don't think there's any way to study markets or commodity markets, really. Realistically, most of us, we studied economics or engineering or geology or something to start with, or business. And then the way you really learn about markets is by doing.
Hmm.
I think every analyst that ever, I think to be good at what we do, you have to start be like analytical thinking. Markets need analytical thinkers, right? It's just, it is what it is. And someone needs to consider every aspect of a market and try to figure out where it's going, whether this is a good investment, um, whether it's a sustainable investment, all of those types of things. And analysts are the people that do that. And the only way that you actually figure out how to do that is by doing it. Um, and one of the things I would say to anyone who wants to get in, study whatever you want. If you
Mhm.
have an analytical mind and you like learning and you like models and you like puzzles, then you can probably be an analyst. But the only way to really learn how to be an analyst is to do it.
Now makes sense, and I can relate to my experiences, but I think you said it very well. Commodity market is like a puzzle, and a very fascinating puzzle to kind of get into. Any personal stories, Amanda, through your career journey, and maybe you can share where you were so excited when you learned something about the market, where you said, and you made a projection or a call because analysts are required to make forward-looking calls, and you were so excited about landing on a special insight which nobody was talking in the market. Any personal stories that come in your mind?
I think the personal stories, I would say, and this is if I was going to give advice to a young analyst, is that the nature of markets, all markets, is there's a lot of noise in them.
Mhm.
Um, and everybody has an opinion and everyone shouts very loud. But you always have to go back to your model and you have to go back to a really disciplined way of thinking. And you need to have the courage of your convictions. Um, and if I was going to give advice going forward to anyone, is ignore the noise. Everybody's got an opinion. They're very rarely right. Always, before you utter your opinion, go back to your model and go back to the fundamentals and figure out if it makes sense. For me, it was the nickel market. I
Mhm.
was managing a critical minerals strategy. Everybody was talking about batteries being the newest, biggest thing. And I said, but wait a second, batteries are still like, I admit they're a growing segment of the market, but they're still like at this point, 20% of the market. They're when it comes to nickel, and all the batteries were NMC in electric vehicles at that point, and 80% of the market was stainless steel, and 20%, and everyone's talking about the explosive demand for electric vehicles. And I'm like, but wait a second. It's only 20% of the market. It's growing, but the whole nickel market isn't growing that quickly. And then in addition to that, I knew that there was a huge mining complex under construction in Indonesia, which is now producing 60% of the world's nickel. And everybody was jumping onto the nickel trade. And from Bloomberg to CNN and CNBC, every time you turned on the TV, battery minerals, battery minerals, battery minerals. It's the newest, biggest thing, nickel, cobalt, all these things. Supply constrained, the price was going through the roof. And I had to tell them, no, we can't do a nickel thing because I don't think the price is going to last.
Okay.
Because one, it was a small segment of the market. Like the explosive growth was in a very small segment of the market. And two, I was pretty sure that these new mines were going to come online, and the small undersupply, the small deficit in the market was going to be replaced with a surplus in very short order within 6 to 12 months. And in that 6 to 12 months, the nickel price was very high, but I was sure it couldn't last. And nobody was talking about this. Nobody, like only some very old nickel analysts that worked for Macquarie and all of that kind of stuff were like, sorry, we've been watching this market for 20 years and this is a short-term blip. In the end, I had to stick to my guns, and I'm like, look, I don't believe these prices can last. I can't sign off on an investment in this space. And 6 months later, the price crashed 90%.
Wow. So I think the news and of course the noise, which is even louder these days, has become a norm. Let me ask you, this is what I've been hearing, energy transition, and everybody agrees the need for it. Always question used to come, we don't have enough of the materials needed, which are needed in a future electron-based economy or electron-based future. So we need oil. Was it an oil lobby trying to extend their future? What's the truth? And you did say that we have enough rare earth and these critical minerals, but the real challenge is only one country controlling. So what's the truth? Do we have enough metals and minerals? And if every country start producing and getting into that space, whatever we need for the best possible future of energy transition, it's doable or not?
That's not quite true. So we have enough of sometimes we have more of something than we think. Do I think that we have enough nickel for the next decade? Probably.
Okay.
Do I think we have enough nickel for the next 2 decades? Not so sure.
2 decades only? Okay. Interesting.
No, I think we have enough nickel for at least the next 5 years. That would be more accurate.
Okay.
I think supply will start getting tight as demand grows about 5 years from now, where the demand supply balance will change. As for rare earths, they're scarce right now, but enough people are building new capacity that I think in 5 years we'll have enough rare earths. So I think in 5 years we'll start slowly getting nickel deficits again, and in 5 years we'll have enough rare earths for everything we need. But every metals market is different. Copper, on the other hand, goes into deficit this year. The price is already up 20% and is probably going to go up at least another 20% next year. It's in full deficit. So every critical minerals market is different. You cannot say, and I hope this, we don't have enough critical minerals. We have lots of some, less of others. And I think that market dynamics are constantly changing. And one of the things is affordability. theoretically, we have enough of everything at a price, but how much are we willing to pay? Are we willing to pay 10 times more for rare earths? Probably not. We might be willing to pay double. And I think how much more are we going to, like, copper is extremely hard to substitute. We're already in deficit. Who's going to win?
So with
Do
that
we have
in
enough for
mind,
the energy transition?
mhm.
I think part of being an analyst is figuring out the biggest thing about being an analyst is segmenting both supply and demand, right? And demand especially is extremely segmented. Do we have enough for the energy transition? I'm not sure. If the energy transition is competing with the AI, who do you think is going to win?
Yeah, that's
Who's
another
got deeper pockets? They both desperately need copper,
copper.
right?
Yeah.
So if suddenly the copper price in 5 years from now, if the copper price doubles, which could be very real considering how much supply we think is available and it's not enough, and you have competing demand for it, are you going to build wind turbines or AI? Who's got more money?
So that's the kind of
In that
competition
case,
ahead. Okay, very interesting.
maybe you, and then the next question is, so if wind turbines that need lots and lots of copper are not going to be able to afford it and still be economic, wind energy won't be economic if it has to pay double for the copper. What's going to replace it? What's the next best alternative? Is it oil? It might be. Is it gas? It might be. Is it nuclear? The energy, so my only point is the answer isn't simple. So it's scarce, it's demand and supply at a price. So there's genuine scarcity. We don't have enough copper in the pipeline to meet all of the demand at present for all of the different segments.
So
So
let's
then
say
it
hypothetically,
prioritizes.
yeah.
Yeah.
So I think it's a supply and demand question, and price is the solver. Everything can be solved depending upon the price. Let's say we really go this AI way and we go electrification of the passenger car fleet. We go full scale electrification of people are trying to do the long distance trucking industry as well. In that scenario, yes, I foresee, and a lot of people have been talking about in the past that the oil demand will go down and it is already peaked. But the question that comes in my mind is that if we go the full AI way, if we go the full electric way, these things might become also costly given the amount of critical minerals and these kind of constrained supply chains. Even if we want to go, we can't go there. So we have
So
to
what
stick with
I would
oil.
say is the IEA came out very recently and acknowledged for the first time that they didn't fully cost out the critical mineral requirements of getting to net zero in their plan. And that potentially it was going to be more expensive than they anticipated. They also didn't consider competition for minerals. They thought they would get the priority minerals and that there would be enough minerals. And they did things like they calculated how much metal you needed to build a windmill, but they didn't calculate the huge 1 meter thick copper wires needed to take offshore wind to land, or how much extra grid capacity we needed to handle all the new electricity. And so all of these demand segments are competing with each other. And I'm not saying we're not going to get an energy transition. I just don't think the energy transition is going to happen the way we think it is. I think that substitution will happen. I genuinely do not believe that long distance trucking is going to go electric because it's way too expensive and it's not very efficient. The basis of being an analyst is being able, it's all about demand, supply, and price, right? How much are people willing to pay? The reality is oil demand has gone up every single year for the last 75 years, except in a recession. Do I think oil demand is suddenly going to fall off a cliff and people are going to stop driving internal combustion engine cars? Sorry, I just don't believe it.
Well,
Do I
it's
think
not,
that
yeah, it's not good for an
more
oil
electric
analyst to say
vehicles?
this, but I think coming from a different angle perspective, I think you bring a quite an objective view about things.
I think we're going to drive more electric vehicles every year, and electric vehicle sales will continue to go up. Do I think that by 2030 or 2035, there will be no more internal combustion engines sold in the world? Sorry, I just don't believe it.
Thanks, Amanda. Fascinating, points you bring about, and I'm learning every way the interesting facets. You mentioned a couple of times there is noise, and go back to the models and price and understand those. Maybe it might be worthwhile to share some of your experiences and learnings, how to build supply and models, demand models in the metals in the mining space. Is it any different from other commodities? Good to hear. What's your journey in building models?
It's been a long time since I actually had to build a model, but what I would say is more so than even a model, you have to have it all comes down to demand and supply. Commodities are all demand and supply. And there's always a lot of noise in the market about what's demanded and what's supplied. And the problem is the noise in the market is almost always wrong, unfortunately. Um, as I said with the nickel example earlier, the nickel prices were high, and yes, the nickel was in deficit, but the demand wasn't being calculated properly, as in they were calculating battery demand for the whole nickel market and forgot that 80% of the market was stainless steel. And in addition, the supply was uncorrected because they didn't realize that a huge new supply was going to come on. And so I would always question the assumptions and always kind of assume that if it's in the press, it's probably wrong, right? The reality is people pay very expensive commodity analysts that know that know demand and supply to a much greater extent than other people. I mean, there are guys in the nickel sector, for example, that spend like all they do is try to figure out how much CATL is going to demand next year. That's it. That's all.
That's all.
Not BYD, not any other batteries, just CATL. Their entire job is trying to figure out how much CATL is going to demand based on how many cars they're selling, what they're working on in R&D, and all of that kind of stuff. So knowing the exact number, but knowing the big picture and being sure of your fundamentals, knowing that 20% of the demand is coming from batteries and 80% is coming from stainless steel, that's very important. And so you need to know your segments. You need to segment well and consider the whole market because people tend to pay attention to just one thing. And that gets on the news and they like batteries are going to change the whole world. Yes, batteries are important.
But 20%.
But there's a lot of different. But in terms of this, they are 20%. I think they might be moving closer to 30% now, but it's taken them 10 years
10 years.
to get to 30% of the market.
So it's the
For nickel.
supply side or the demand side, which is more tricky. I think you mentioned about the demand side, but I believe if the supply is the hands of countries like China, which are opaque from a data transparency angle. So how would one really go about tackling the supply side market data versus the demand side data? What would you say to dig deeper
Actually,
into?
demand tends to be something.
Mhm.
So while people get their segmentation wrong on demand, like they forget how much of the market it is, if they say solar panels are going to grow, they're usually right. If they say how much like EVs could grow between 5 and 10%, but they're usually right. What they get wrong is segmentation, like how much of the market those segments are. But if you're smart, you can figure out demand. Supply is much harder.
Supply is
And
much. Okay.
on commodities, especially critical minerals, they're global. China does well because it processes everything. It mines a lot, but it processes more. And so you need to know, for example, as I mentioned earlier, copper's already in deficit. It's begun a small deficit, and the deficit will widen next year. But the deficit started early because three mines had disasters, right? There was a cave-in, three very large global mines that made up like 5% together of global copper supply, all had a pit wall collapse, a tailings dam collapse. They had a flood. Things go wrong in mining. In addition, you can count on new demand coming on, and it shows up late. Nobody knows if construction is going to be delayed or not, right? So the last time the lithium price spiked and everyone said, oh my God, lithium's out of control, it didn't spike. The reason it spiked was because a very large mine that was going to be 10% of global supply was expected to come online, and it was a year late.
Okay.
And that year late led to a 500x surge in the lithium price because it caused a small deficit, because all of the expected supply didn't materialize. Figuring out which mines are going to be funded into construction, which construction is going to be on time, and figuring out how much, whether or not there's going to be accidents in supply, or whether recently Glencore in copper brought down its copper guidance. It's producing 10% less copper this year than it did last year. Mines don't work on steady output the same way oil does. So actually calculating supply is much, much harder.
Much more harder. Are there data transparency issues? Just like in oil, we have the EIAs. Are there, I mean, of course, given China, I mean, IBUs on the National Bureau of Statistics for China. What would you say are the data sources? Is that available, or it's a much harder job to dig the numbers and build the balances?
It's just a harder job.
It's hard.
So you have the public mines and the mines in the West, but there's, thousands of them at various stages of development. So at any given time, let's just say copper, there's probably about 300 companies out there exploring for copper, maybe 20 developing copper, 20 to 50 developing copper mines. They may or may not be successful. How many of those 350 odd mines is actually going to make it into production? Maybe 5 or 10%.
Okay.
So, but what happens if 5% make it into production? What does that mean for supply? What if 10% make it into production? Do we now have too much? Figuring that out, you really have to have your finger on the pulse, and really only market insiders tend to have it. And that's where analysts that work for small banks and commodity specialists really become invaluable in our space. And they all tend to have their finger very, very close to the pulse of extraordinarily small businesses on a global basis.
So it's a very interesting. I'm learning, as I said, that being an online analyst for 32 years, didn't appreciate and realize this kind of a dimension. The question that brings in my mind, Amanda, is that, of course, you have spent so many years in this space, and you are so passionate and you are so enthusiastic about it. Are you seeing people who come into metals and minerals, commodity traders or analysts from other branches, like an oil people coming into it? Or how much is the cross commodity? Or once you start from the bottom as a metals and mining kind of analyst or a trader, you tend to stay. How much is the cross commodity churning happening? Is there cross commodity learnings coming into sort of your space? Because oil market is, yes, the most analyzed and researched market. Anything of that sort happening in the industry?
Yes. Well, everyone and their brother is trying to become a critical mineral specialist right now, and a mining specialist right now, because the market's very well. And realistically, oil is still doing very well. The reality is we buy more oil every year and have. It might stop growing quite as quickly going forward. I don't know. I'm not a specialist in this space, but I do think that there's still a good market for it. I've seen a lot of new people called critical minerals specialists and
Hmm.
consultants propping up in the space. But
Hmm.
if you look into their background,
Done that.
they just, they've never done, they have no real experience. And it's very hard to know anything about critical minerals if you haven't been in the space for a very long time. And very few people have, because up until recently, it was a market nobody cared about. So yes, I'd be very wary of all the newfound experts. And normally, if you don't have some experience as a mining analyst in the big boring, I don't think the crossover from oil to, I think from coal it works, but from oil it's very different. It's a
Mhm.
massively different market. It's
Wow.
much smaller and it's much more opaque and it's much more esoteric.
Hmm.
So when I was working on desks, we used to argue with the oil guys. It wasn't very nice. And I'm like, what do you guys just have to, you stick a spigot in the ground and the stuff comes out. It's a lot more complicated to mine.
Complicated mind.
Uh,
Mhm.
and that's the thing. Um, Exploration, development, it takes 5 or 10 years to find a discovery, another 15 years to develop it, and then the mine operates for 15 to 50 years.
Mm.
It's just a much longer, slower, much more complicated timeline than oil.
Mm.
I really don't, they sound very similar. So the fundamentals of demand and supply are the same, but the technical detail and the opacity in the market are completely different. I
Different.
don't think it's something you could just switch over to very easily.
Mhm. One technical bit good to, I guess, explore is that what makes oil go, you can store it, you can ship it, you can pipeline it, you can, it's such a, it flows, right? The metals and minerals don't flow, right? So is there any technical consideration, not just when you mine and produce, but in the whole shipping side and the storage side, which are very important aspects to know to analyze this market?
So stockpiling doesn't tend to happen as often um, so let's just talk about copper because it's a well-known market.
Mm-hmm.
Copper, you would mine it, and then usually you would concentrate it on site to about 30% approximately. So do minor concentration on site, and then you'd ship it to a refinery that would turn it into pure copper. And from then it would be turned, and then it would go to something called a fabricator who would turn it into copper wire, various
Mm-hmm.
different grades of copper wire, and then it would be directly shipped to end users. Um, we don't tend to stockpile. There are
Okay.
stockpiles in LME warehouses and stuff, but there's nowhere near the level of stockpiling or the amount sitting on ships around the world. You usually have demand, like if if demand is coming down in something, you stop producing as much. People won't produce
Ah,
at a loss. People don't produce
okay.
for stockpiles.
Okay.
It's much easier to turn people because there's so many steps in the process to get metal into a usable form, and it's so expensive. The transformation process is so expensive in metals often. You frankly would just stop if you didn't have the demand,
You
you'd
would
stop
stop.
mining.
Okay. So there's nothing like backwardation contangles in the metals and the minerals, I guess,
Look, I'm not, it's not, no, it's nowhere near as significant.
as
So
oil.
yes, sometimes the futures price can be a little higher or lower based on expectations of demand,
Mm-hmm.
or supply. So there is a tiny futures arbitrage to futures. There's a tiny bit of backwardation contango, but nothing like the oil market.
And in the same light, how's the physical trading in or versus the paper versus the derivatives? Because in the oil, the derivatives in the paper has become probably 30 to 40 times the physical. What's the scale of the paper and the derivatives market? Probably very less.
Okay, so I was never in the trading part of the derivatives
Okay.
market, but my understanding is that the traded derivatives in metals are a tiny fraction of the actual market. It's the opposite, once again, to oil.
Hmm.
So
A very physical market then.
it's an extremely physical market. So a lot of people don't realize this, that most of the most of the metal doesn't get traded on markets. Most of it's contract to contract. So
Mhm.
it's a sales operation called sales traders that work within the metals companies or an intermediary company that directly sells. So uh, a gold mining company, for example, might have an offtake, or a copper company might have an offtake for 80% of its supply or 90% of its supply directly to an end user or to a refinery. And that refinery would have contracts with the end users. Only about 10% would be sold into the spot market.
10% spot. Well, that's a very interesting. I'm going to change gears, Amanda. I mean, I think I've become a student of metals and mining, and so many parallel thoughts coming in my mind. So really appreciate what you're sharing, your insights and knowledge. It's called green energy scam, right? Yes, I do want your views and opinion, but let's say if you're an analyst who has to build a view on this topic, right? How would you go about thinking about it, especially from a metals and mining, kind of perspective? There may be many other reasons why, people are calling the green bubble or things like that. But from a metals and mining angle, is there a view you have, and how do you build your view?
So what I would say is green energy, it's still an energy market. And what we can say without a shadow of a doubt is that the markets that have invested most in green, most in green energy, mostly in Europe, have a significantly higher cost of energy than the markets that are still heavily based, that have lower green energy percentages. So as I mentioned, from a metals and mining perspective, the IEA now acknowledges it, but
Mhm.
in up until very recently, they massively underestimated the amount of metal they would need in the entire system to build out renewables. Um, and because they underestimated that, the metal requirements, they also underestimated the total cost. And you hear in the market all the time that solar and wind are cost competitive. But the lived experience of everyone who lives in a country that has lots of solar and lots of wind is that energy is a lot more expensive, not less expensive.
I'm a
That's
living
just
example in Australia. Yes.
right. And so, and that's what I'm calling a hoax. What he's saying is, you all promised us cheap green energy, and it isn't cheap. And all of the countries that are dependent on green energy right now are really struggling. Their people are, the energy prices have, I mean, I live in the UK, energy prices tripled,
Mm,
right? Like my electricity bill tripled in the last 5 years. That's
mm,
expensive. That's
mm,
incredible inflation. And most people blame that on on the reduction in oil and gas and coal in the grid and the increase in renewables. And I think that's what he's talking about, that the promise of green energy hasn't, in terms of cost effectiveness, has not materialized.
neutralize. And that is one part which you explain is not fully appreciating the cost elements to do the energy transition, and especially on the minerals and metals. So I think, yeah, I think that help square it. Uh, Future ahead 26 and beyond, Amanda, I want to ask you about some of the big things that you are watching, some of the big things the analysts in this domain need to watch, some of the big things the analysts in, not in metals and mining, but we have to study from other commodities need to watch. So maybe three things really to watch ahead.
Um, so going back to the whole Trump hoax, not hoax, I don't think that's the point. I think we need to go back to basics. And I think that one thing is absolutely sure, the world has an insatiable demand for energy in all and every forms. Energy frees up human beings to do productive work more productively. And it liberates humanity. There is no society on the planet that doesn't want more energy. They will take as much energy as they can get. I believe the constraint is not how much energy is demanded, but how much we can provide. That being said, what we've learned in trying to control the energy transition is that we didn't go back to cost basics. Like, it has to be economic. We've been through 5 energy transitions. We went from coal to oil to gas to nuclear and now to renewables. They've in the past always happened naturally when one became more efficient and sufficiently cost effective, right? I think we need to. Do I think we're going to transition eventually? Yes. Do I think it'll happen on the prescribed timeline? Maybe not. Do I think it'll happen? I think you should be open-minded to the fact that the transition might not look the way it's been prescribed to look. I'm a huge, huge fan of nuclear. I think we're undergoing a nuclear renaissance, and you're going to see an explosion in nuclear technologies, small modular reactors, and we're going to need a lot more uranium, which could be a very constrained critical mineral going forward. But I would be open-minded. I would be really strict about the fact that, one, the world needs as much energy as we can possibly get, and I think it's good for every single energy market: oil, gas, coal, nuclear, and renewables. I think they're all going to continue to grow. I think the proportions they're each going to grow will depend on how cost effective they become, if that makes sense.
So I think you've just, I would say, elevated the brutal importance of really doing and understanding the cost economics of this energy transition, and metals and mining is a very key element and is not so easy to understand. And as you mentioned a few times, that how the noise or the news may get blown out of proportion. So really doing the cost side is very critical. I want to ask a few more things, which your answers are strong. I came to Australia 4 years ago, Amanda, and I heard Australia mines, China refines. Australia mines, China refines. Australia made its fortune on digging things out of the ground in mining, whereas all the refining, the processing of the metals and minerals happens in China. Now, I think the world has understood that keeping the supply chains or processing in hands of one country, what it could mean from a geopolitical and sovereignty risk angle. In the next 5 years, 10 years, do you see de-risking happening? Do you see that other countries, other places really becoming an alternative, and we may have a more balanced, spread out processing, or you still see China's stronghold is going to continue?
I think for the next 5 years, you're going to see an incredible industrial renaissance in the West. Australia and the US especially have prioritized this. But people forget that processing takes time. It takes at least 5 years to permit, build, finance, and make operational new capacity in processing. It's like it can be done maybe in 3 years, but 3 to 5 years minimum. So even if we commit to it today, we're not going to get now, the easiest thing to do is expand existing capacity. And there are some easy wins by expanding capacity, by doing things like doing more recycling. We offshored processing because we weren't very good at it anymore. It was energy intensive and it was dirty, and it was just cheaper to do it in China. We now realize we can't do that, but we have to relearn how to process. The first step is expand the capacity you've got. The second step is build new capacity. These things take time and money, and they won't happen quickly. And so in the short term, there is no quick fix.
There's no quick fix. Okay, so
I mean, mining's even slower. New capacity for mining takes 15 years. So I think we need to shorten those timelines. But to pretend that you can just throw some money at it and next year we're going to be processing all our own metal, it's not going to work that way.
No, you're right. I mean, oil refineries, I know they are, I don't know with what headline numbers you will say for a mining, but oil refineries cost north of 20 to 30 billion dollars of a sizable scale and complexity to build these days, and it takes many years to come. And then the business is cyclical, marginal business, so you don't earn and recover the cash. So it's a tough business. Any order of magnitude number, building a mine
So,
cost like,
so mines, this is the problem with mines and especially critical minerals. Um, you can build a graphite mine for anywhere between 100 and 300 million,
okay,
right? Just one small modular sized mine. A processing facility might cost 100 million, so it can be quite cheap. But I mean, you can obviously build there's a billion-dollar graphite mine and graphite processing facility being built in Canada right now. You can build much bigger. But the thing is, every single different commodity has a different kind of refinery, right? Rare earths have a very specific, like light rare earths have a different processing facility to heavy rare earths, right? Um, Nickel has a different kind of like every single one of the metals has a different processing facility. That's why it's not quite like oil and gas. Yes, it takes a long time. And so what's similar to oil and gas refineries is that it's very capital heavy and it's not very profitable. That's why we offshored it all to China because it wasn't very profitable, because it took billions to build and it was a very small margin. And so nobody wanted to do it. It was a dirty business with small margins. It was nobody cared about it. Now we know we have to build it. We can't build it overnight. And the difficulty with minerals is it might not cost as much. Like each individual mine and process doesn't necessarily cost as much as an oil field, but we need 10 or 20 more of them. And
more.
there are 10 or 20 different kinds of metals.
Wow. I thought
Something like
that.
iron ore and steel can cost billions,
Uh-huh.
but something like graphite can cost
Hmm.
hundreds of millions.
Okay, fascinating. I want to close, Amanda, with maybe some parting closing thoughts on if you want to go metal by metal, you want to share some of your calls or projections, if you may like nickel, as you mentioned, copper, big deficits. Uh, any calls, any projections you want to throw out in open, which people may get excited to dig deeper and understand what kind of challenges you would put to the analyst across.
Look, I think over the next 25 years, which is a long time, I think in aggregate, we're going to need to double global metal output and potentially triple global metal output, depending on demand and availability. It'll actually be more constrained by how much we can mine. So the market is working well, but it won't work equally for all metals. Of all of them, the one I'm most worried about is copper. It needs to be watched very, very carefully. The deficits have begun, and I just don't see any long-term solution in sight. Nickel and lithium are both in slight surplus, very tiny surplus right now. Over the next 3 to 5 years, I think that market will come into balance. We need lots more of both of them going forward. The one I'm actually watching the most is uranium. Nuclear has been ignored for 20 years. It's undergoing a renaissance, and the pipeline is
Mhm.
nowhere near big enough to support the scale of growth that I think is coming. So I would be watching uranium really hard.
On that note, Amanda, again, thank you very much for illuminating. I would use that word on and part of a market segment which I never learned or paid attention to, but indeed is hot topic, is part of the hot discussion, and you laid bare a lot of critical basics and about the market. And I'm sure after watching this, you might get a lot of people calling you. They want to learn more from you. And I think that's the whole idea of this podcast, is to inspire a lot of people. So really, thank you very much for sparing the time in your evening in New York. Wish you safe travels and a fascinating journey across the markets.
Okay, thank you so much, Mukesh. It was great to speak.
Thank you.
XAnalysts. Empowering analysts, transforming markets.